it's not every day that you find a company that has both performed well, but is also at a decent price. And I think AMAT falls into that category. We can see it's up 200% over the last 5 years. That is a good performance. But over the last year, it's really not done crazy well. It's up 16%, which is good, don't get me wrong, but it's off 30% of all-time highs. So there is room to grow on this stock, clearly, because it's hit it before. That's when semiconductor sentiment was at highs. And I think it's a bit low right now, but I don't think it should be that low. Right, since 2014, late 2014, so the last decade, it is up a lot, up from 25. So it's outperforming the S&P 500 performance there, which is only up 200%. I'm not perfect at mental math, but 200% increase in 25 does not equal 170. So this is a company that's done very, very well. It's also cheap, 19-20 PE. That's not expensive. 19.5 PE, right? 17.75 forward PE. The S&P 500 PE is about 27. The forward PE is about 23. So you're getting a company that has outperformed the S&P 500 significantly, is in a key industry, and is cheaper. It really is. Part of the reason it's cheaper is earnings weren't crazy good, at least projected earnings. You're projecting 10% growth in terms of earnings per share and about 8.6 in revenue, which is fine. That's not terrible. You would want it to be higher, but it's really not that crazy, especially when you consider how important AMAT is. And it's a very, very important company. So NVIDIA, we all agree NVIDIA is a good company for the most part. It's very important. They're one of the largest companies in the world, do a lot of revenue. We all like NVIDIA, right? Well, NVIDIA can only do what they do with the help of TSM and Samsung, and AMAT gives those guys supplies, key supplies. So this is an important company as well. This is when you're looking for stocks that are like, okay, this is a good buy right now. Not that you can't buy good companies at inflated prices. I do that as well. I've done that. But this thing has all three metrics you're looking for. It's reasonably priced, maybe even more so than you would expect. It's in a super key industry, and it's performed very well over the last 5, 10 plus years. This is the sort of stuff you're looking for, and this does not happen all the time. Now, I'm not saying you have to buy it. I'm not saying that. I own the stock. I'm planning on buying a bit more, only so much more, because it already makes up, and I already own some, so I don't want it making up too much percent of my portfolio. But this is the sort of stuff you're looking for, in my opinion, when buying single stocks. Doesn't always work out perfect, but this is about as good as it can get. Schwab agrees with me. They think it's an A rating. They think it's going to be the top 6% of all stocks performing over the next year. So Schwab agrees with me. They think I'm right, which is cool because they do not always agree with me. 3 stars there and a wide economic moat. I talked about moats before, but in the semiconductor industry, that's key as well because there's only so many avenues, so many people that can make the specific stuff. This applies to ASML as well. I've done videos on ASML, super important company. We got 4-star rating, buy, avoid, buy, moderate ESG score. I mean, the only thing you really do not have with this company, in my opinion, is you'd want better earnings. But if the earnings were spectacular, it wouldn't be at this price. It would be higher, which is fine, but then it wouldn't be as cheap. So there's always going to be a drawback. You're looking for as many of those things. Okay, is the earnings good? I mean, and they guided fine, and they've a history of beating earnings as well. So yeah, for this stock, AMAT, I'm really not concerned. I like it a lot. Obviously, this is not investment advice, but this is about as close as I could ever get to saying, hey, this is a good value on a solid company. And over the last year and a half, valuation metrics were towards the cheap end, right? It was somewhere between 17.5 and 24. For normal PE, we're at 19.5, somewhere between 16 and 24 for forward PE. We're at 17. So it's pretty cheap. It really is. Consider all things considered. Take a look at what some of the analysts have to say. So 25 of the 37 are saying buy or strong buy. This is almost exactly average for a growth stock or a stock that isn't dividend dash value. You would expect about 2/3 to say buy, strong buy. This is almost exactly that. So they're not saying anything super key. The analysts are. The price targets are way above, though. That's kind of interesting because people moved it up and they still like the company, so they don't want to move it back down. at least too dramatically. But yeah, there's only so much I can say on AMAT. I've covered it briefly before. It's followed even further. I think this is a good entry point for a long-term investment. I'm going to do that. I'm not saying you should do that, but that's my personal opinion. I like the stock. I think it's an important industry. I love semiconductor stocks in general. So important. This is a good, well-run company, right? Over the last 10 years, 5 years, it's performed very well. Pays a decent dividend, fairly cheap. I don't know how much better it could get other than it's underperformed a little bit in terms of forecasting earnings. But anyways, I think I've covered all I want to in this video. If you enjoyed, I appreciate if you left a like or subscribed. I hope to catch you in a future video. Thanks for watching.